Good morning and welcome to Economy and Market on Business Day TV, where we give you a comprehensive breakdown of happenings in the economy as well as in the market. So today we're going to be discussing on a very important subject, but before we do that, let's touch on the business news making the round. So we're starting with NLNG, that is now pivoting to third-party gas suppliers as its plant utilization has dropped to 60%. NLNG is increasingly relying on third-party suppliers to sustain its operations after dwindling feed gas from international oil company shareholders has slashed its plant utilization. The general manager of production at NLNG, Nnamdi Anowi, who was speaking at the Gas Tech exhibition and conference in Milan, said that divestment by IOCs like Eni, who transferred assets to Oando, has forced the company to now secure 75% of its feed gas through new gas supply agreements. A second tranche is due in October, with volumes expected to stabilize from late 2026 to early 2027. Despite operating 6 trains with a capacity of 22 million tons per annum, utilization has averaged only 60% in the last 3 years. Train 7 is under construction to expand output by over 30%, but feed gas supply still remains the core challenge. Anowi emphasized that Africa's untapped resource reserves, urging more investment in investment and offshore exploration. Nigeria's supply issues is also traced to Renaissance past underperformance. However, at the 2025 NICE conference, Renaissance confirmed that it was meeting LNG's obligations for the first time in 5 years, driven by a 40% crude output surge and new funding. The company now plans to double gas supply to 300 million square cubic feet per day and invest $15 billion in infrastructure and asset rehabilitation. Then we move on to Vest Aquico, who has petitioned SEC after a collapse of its $60.5 billion offer to Africa Capital Alliance for Cornerstone Insurance stake. Vest Aquico petitioned SEC over a disputed deal to acquire a 79% stake in Cornerstone Insurance. The Nigerian investment firm alleges that the company's major shareholders reneged on an agreed $60.5 billion transaction, despite Vest meeting all conditions, including providing a Wema Bank guarantee of the same value. Copies of the petition were sent to NINCOM, that's the National Insurance Commission, and the Financial Services Commission of Mauritius. The sellers, comprising Pioneer Management and Business Ventures LLP, Capital Alliance Private Equity 2 and 3, and Mauritius-based Bank Ashore and Cap Ashore, confirmed in August that a share purchase agreement was agreed in form. However, days after Vest submitted the revised guarantee, the sellers, represented by former Industry Minister Oke Enelama, returned the document and pulled out of the deal. Vest has accused them of acting in bad faith and breaching agreed obligation. This tussle comes as Cornerstone Insurance stock trades around 7 naira 30 kobo, valuing the company at over 130 billion naira. At current prices, the disputed 79% stake is worth more than 100 billion naira, significantly above the 60.5 billion deal value. With the Insurance Industry Reform Act of 2025 requiring capital requirements fivefold, control of Cornerstone is highly strategic ahead of expected consolidation across Nigeria's insurance sector. Then we move to eTransact stock that rose by 45% in 1 week as it top advances on positive events. Shares of eTransact surged by 45.15% in the week ended September 12, 2025, closing at 14 naira 95 kobo to stop the Nigerian exchange advances chart. The stock opened the week at 10 naira 30 kobo and broke through its long-standing 10 naira resistance, driven by high buying pressure. Momentum was fueled by FIRS approving eTransact as a provider for the nationwide e-invoicing rollout, reinforcing its role in the government's digitalization and tax business processes. The payment fintech reported a pre-tax profit of 2.1 billion for H1, up around 18% from 1.8 billion a year earlier. However, this is coming despite the revenue dipping to 13.2 billion. However, the revenue dip was contrasted by a sharp reduction in cost of sales to 6.8 billion from 9.4 billion. That boosted gross profit by nearly 40%. The company's operating profit rose to 2.07 billion, despite higher administrative expenses, while lower finance costs strengthened profitability. As at its July 24 AGM, the shareholders of eTransact approved raising up to 100 billion through rights issue, placement, or debt to expand capital. eTransact stock began trading 2025 at 6.50 Naira. It recorded some early weakness in the first quarter of the year, but has rebounded strongly in Q2, and in Q3 is already up by 91%, with September delivering the sharpest gains. We move to China, where the country has been seeing an economic slowdown, with that slowdown deepening in August as retail sales and industrial output are missing expectations. China's economy showed fresh signs of strain in August as factory output and retail sales slowed to their weakest level in a year, underscoring domestic demand woes and heightened calls for more stimulus. Industrial output grew by 5.2% year-on-year, missing forecast of 5.7% and marking the lowest pace since August 2024, while retail sales rose by 3.4%, cooling from July's 3.7% and falling short of expectations. Fixed asset investment also slowed sharply, expanding only 0.5% in the first 8 months, its worst performance outside of the pandemic. Economists remain split on whether Beijing must step in with fresh fiscal and monetary support to keep its 5% annual growth target on track. ING's Lin Song flagged the high probability of another 10 basis point rate cut and a 50 basis point RRR cut in the coming weeks, while another analyst said that momentum was weakening but not yet at crisis level. Unemployment and household spending remains fragile. This is as unemployment and property markets are weakening. Unemployment in the country rose to a 6-month high of 5.3% in August, while home prices fell 0.3% from July and 2.5% year-on-year, further weighing on confidence. Analysts warn that the fourth quarter could see further deterioration, with consumer loan subsidy yet to show results and fiscal support fading. Beijing has pledged to make full use of fiscal and monetary tools, but economists caution that current measures may prove insufficient to reverse the slowdown. And when we return, we'll come back with updates from the NGX. Back, and let's take some insight from the market activity of Friday. We look at the NGX All Share Index closing lower. There was a bit of cool off in the market after 4 consecutive days of bullish action. The NGX All Share Index slowed to around 140,000 points, shedding around 120 points or 0.09%. Despite the slight dip, the year-to-date return remains at 36.55%. Recall that in 2024, we had a full-year market return of 37%. Trading activity was robust as we saw 434 million shares exchange hands in deals worth around 16.17 billion naira. The market capitalization as of last week settled at 88.92 trillion naira. On that day, we saw Regency Alliance Insurance gain 9.93%. eTransact also gained 9.93%. Kellerams and International Breweries also. Kellerams was also a top gainer. Then we have Industrial and Medical Gases also a top gainer. John Holt also posted gains, all posting gains of 9.92, 9.91, and 9.91 respectively. On the flip side, Mutual Benefit Assurance was the top loser of Friday. They were followed by Lasaco Assurance, Dar Communication, PZ Cousins, and NGX Group all posted some moderate declines, 3%, 4% declines. And in terms of actively traded stock, NSL Tech, Secure Electronic Technology, was the most actively traded stock of the day, with 71 million units of that share traded on that day. They were followed by Access Holdings that saw around 40 million shares traded in deals worth over $1 billion. Sterling Holdings also recorded significant trading action. Regency Alliance Insurance and Charms were also the most traded stocks of the day. Then from the NGX, when you look at the global market, on Wall Street, Dow Jones gained 0.59. This is as S&P 500 slipped slightly. There was a slight dip, a very modest dip of 0.05% slip in S&P 500. We know that last week we saw Dow Jones enter 46,000 points for the first time ever. Then it continued in that rally, gaining further in 46,000 points. On the other hand, we saw tech stocks we also saw tech stocks that defined by Nasdaq Composite advanced by 0.44% on Friday. Then in Asia, major indices closed higher. The Nikkei 225 rose by 0.89%. The Kospi index from Korea rose by 0.90%, and the Hang Seng index advanced by 0.22%. That's all we can take on the market insight. And when we return from the break, we are going to be having a conversation about the current miasma that is going on between Enugu State government and Sujimoto. Stay with us.
Attention business leaders. Want to make informed decisions? Join the ranks of the best with Premium Business Day. Access in-depth analysis and expert opinions to stay ahead. Subscribe now at premium.businessday.ng and unlock premium content. Plus, you get 50% off your first subscription. Don't miss out. Make smarter choices and seize new opportunities. Sign up now and elevate your business game. Visit premium.businessday.ng today.
Now let's look at what is making the rounds. 2 weeks ago, we saw a situation where a prominent construction company in Nigeria we saw the news of the EFCC releasing a wanted poster for the head of a prominent Nigerian company, a prominent construction company, Sujimoto. Basically, the controversy erupted based on an education infrastructure project that was awarded to Sujimoto in Enugu State. This happened in June 2024. The EFCC accused the real estate mogul Olasijibomi Ogundele, who is of Sujimoto, accused him of mismanaging funds and abandoning project. Let's look at this. On July 2, 2024, Sujimoto Luxury Construction was awarded a contract valued at 11.46 billion by the Enugu State government to build 22 smart green schools. The goal was to have them completed within 6 months. To kick off the work, the state government released 50% of the contract sum, this is around 5.76 billion, as mobilization fees. Fast forward to May 8 and May 9, 2025, the Enugu State government, Ministry of Works, did an inspection to the 22 sites, and it was revealed that little to no progress had been made in so many of the sites. In some, they said there was nothing beyond foundation level, and in others, they said even the basic structural works had not been done. The government officials now alleged, they alleged that there were defects in some of the sites, that the contractor employed unqualified workers, that they failed to follow the structural drawing, that they ignored repeated calls and project briefings. As the controversy escalated, the EFCC declared Sujimoto wanted for alleged diversion of funds and money laundering. And in response, Sujimoto's CEO, Mr. Ogundele, released a video statement. He denies allegations of fraud, money laundering, and even diversion of funds. He describes the issue as a contractual dispute, saying that the cost of materials, cement, labor had surged, that inflation and logistical challenges affected delivery, and that some sites faced security issues. He insisted that company's integrity remains intact. And on the show this morning, I have Kenechukwu Chibueze, who is a lawyer. He's a finance lawyer with a penchant for project and project finance law. He's also an associate with SPA Ajibade Co. Good morning, Kenechukwu.
Good morning.
We need you to be louder on this show. So, okay. So, first things first, we want you to help us explain what happened between Enugu State and Sujimoto. From your own perspective, you have quite a strong opinion on the matter.
Well, like you've rightly said, the Enugu State government awarded a contract worth 11 billion naira to Sujimoto for the construction of 22 smart green schools.
Okay.
In some local governments of the state.
Yes.
Right. So, in order to expedite the project, the Enugu State government forwarded a part payment of the contract sum, which is also called the mobilization fee, to Sujimoto, which amounted to 5 billion. And it alleges that despite this, that Sujimoto has, not done much
on the project.
But well, in the legal realm, there are some key points in this whole, in the facts which we have,
in the whole drama.
Yes. Firstly, the payment of close to half of the contract sum. I think that's a key legal point. Then also, the fact that Sujimoto, through his CEO, did not provide, as alleged, did not provide the bank account where the performance bond, a bank account in the domicile in the bank of the bank which provided the
performance
bond. Yes. Okay. Then lastly, the fact that according to the Enugu State government, Sujimoto has been nowhere to be found
for since July last year.
Yes, up until now.
Wow. Okay. There's a lot to take home from the entire thing, but one question I have is, what kind of risks are commonly present in these are large construction projects? What kind of risk do you think? And there's a thing where they said they allocate risk when you have construction projects like this. How does allocating this risk help to prevent disputes like this? As we can see, there's been a breakdown of communication. There's also a situation where the state feels like they lost their money. Sujimoto feels like he's been unfairly accused. So the situation, what are the risks that are associated with projects like this, and how do you share the risk?
Okay, yeah, that's a very good question. There are lots of risks that come with projects like this. Numerous risks. I would lie to you if I tell you that I can sit down here and list all of them out.
Okay.
But particular with this project, I would say there are 5 risks which come to mind. We have construction cost overrun risk.
Okay.
We have force majeure risk. We have performance risk. We also have design risk. And we also have construction delay risk. So I'm going to explain all of them to you one by one. So construction cost overrun basically means a situation where the cost of the project, as was envisaged at the time of planning the project,
went up,
goes up. It exceeds what was envisaged.
Yes.
So that's cost overrun risk. This is something which is bound to happen in projects, given the foreign currency volatility,
yes, and also inflation pressures.
Yes, it's bound to happen. Then also you have the design risk. You have designed what you want to.
Structure. An architect has done something magnificent for you.
Yes, you've designed what you want to construct. What if when you go on the ground, you find out that there are some parts which needs to be added?
Yes.
And it was not envisaged in the contract. Who then pays for it? Who's going to construct that? So there are many risks that come with this. So what the parties have to do, in essence, is look as much as possible into the future. Check if the possibilities of issues like this happening, right? Then when you and this is usually done by a process which we call the legal due diligence.
Okay.
So when you find out that there's a possibility of this types of risk, then you now have to allocate the risk and also mitigate the risk. Then you also have to ensure that the contract itself is back to back with any other contract which is drafted to mitigate this risk. And by mitigating risk, I basically mean enabling the parties meet their obligations. If, for instance, that during the course of the project, the construction company would need to buy, let's say, building materials, then what do you do to mitigate that risk? You enter a supply agreement.
Okay.
That's one of the ways to mitigate that risk. If you know that at many instances during the project, the constructor may need to, exchange naira to foreign currency, then you find a way to, enable it to do that whenever it comes up by, for instance, currency hedging.
Okay.
Then you also have risk allocation. you might not be mitigating the risk per se. The risk is still going to be there. So these two contracts I mentioned, which is a supply agreement and the currency hedging agreement, what they basically do is mitigate it. They reduce the risk.
They reduce the risk, okay.
Whereas risk allocation is that the risk is still going to be there, but it's going to be allocated to parties who can best handle it. So these are two different things.
So is there like the risk allocation, is there like a third party who can, is this like the arrangement for a third party, or we're talking about the, let's say, the government and the contractor right now?
Well, if for risk allocation is between the parties. Okay. If a third party is coming in to help one of the parties meet their obligations, then that is, a risk mitigation, so to say. So for instance, risk allocation can be an instance where a contractor is engaged to construct a huge project for the government of a state, be it the local government, be it the federal government, be it the state at the state level, be it an agency, a department, whatever it is. And for a very fact that they have the ability to provide security protection more than you do. Okay. So what do? You don't leave that to your own. You don't leave it to your, to you to do as the constructor. Yes. Because you can't handle that. The governments are the ones in charge of the law enforcement agencies. They could easily mobilize their men to guard the project. So at that instance, the risk of the construction of the project stalling due to insecurity will be allocated to the government if that is envisaged by the lawyers who do the due diligence. So in this case now, that means what we have now in this case of Sujimoto and Enugu State government. So Sujimoto is saying things like cost of materials went up, that the logistical challenges has affected their ability to deliver on the project. Who is at fault? Is it that they did not come up with a proper risk allocation strategy for this, to prevent this kind of debacle? Because this is billions of naira now hanging in the line. Okay. I would refrain from delving into the merits of their arguments. Of the argument of the issue, pointing fingers, who is at fault, who is not at fault. Okay. That's the exclusive preserve of the court. I believe it's going to proceed to litigation. Whenever it does, the court is going to decide that. But my key issue is the fact that there were certain measures which should have been put or taken to ensure that these sort of issues do not happen. It's not rocket science. If these measures or these issues or these solutions we are put into place, then the parties will not have arrived at this moment. Like you mentioned, you said that Sujimoto is saying that they were having issues with cost of materials, cement prices went up. He used that as an excuse. That cement prices went up, that the cost of labor has surged, that they were having issues with reaching some of the sites and all of those things. Just like I've earlier said, these issues would have been easily mitigated or allocated to the parties who could best handle it. For instance, the issue of foreign currency, like I told you, a foreign currency hedging agreement, would have come in place. It's not rocket science. Then, like I said, for the insecurity, you are allocated to the state government. But then, as to who is at fault, although I said I'm not going to delve into the merits of the issue, as to who is at fault, it will depend on the terms of the contract, the construction contract itself. Were there milestones that they were expected to meet? The constructor, who is Sujimoto, was expected to meet. Has he met those milestones? Were there obligations on the part of the Enugu State government? Has he met those obligations? These are the salient issues which may come up when they go to court. So now let's talk about performance bond, because on this issue, one of the big topics that has been coming up on this issue is performance bond. So explain the use of performance bonds. Okay. Like I earlier said, performance bond is one of those contracts which are used to mitigate risk in construction projects, particularly in projects involving the government. So it is the risk that a performance bond mitigates is the risk of the construction company not meeting his obligations,
Okay.
not building the project, or meeting milestones, or building something that is substandard, So basically, what it does is that the construction company would be required to enter into the performance bond contract with, be it a bank or an insurance company, who would act as surety, and just the surety is basically guaranteeing that the construction company is going to meet its obligations, right? So how do they guarantee this? They are going to pay the procurer, which is the government,
yes,
an amount of money in the event that the construction company fails to
default on this contract.
Yes.
So that amount of money, where is it coming from? It's coming from the contractor.
It varies. It depends on contracts vary from by contract, right?
Yes.
So it depends on the agreement between the parties. I'm aware that at some instances, the bank might require the construction company to pay in some money. It might not be the full amount of money, the full security, so to say, which secures the construction contract. Then at some instances, it may just be that the bank will require the construction company to domicile an account in them, which is going to be where the contract sum for the project will be paid into. Yes, just to monitor the construction company and how they are spending money, and whether they are using the proceeds, the contract sum right.
Okay. So in this case now, the issues now, in this case, another third party that has stepped into the case is Jaiz Bank. It's noted that the performance bond was provided through Jaiz Bank. Do you have any understanding of what's going on? You said something around the fact that Sujimoto failed to provide the account number. Has Jaiz Bank made any statement on this issue?
To my knowledge, I have not seen any statement
from Jaiz
Bank.
Okay.
Right. But the thing is that I would say that this is also another issue which could have been easily averted, easily avoided, right? I know that most banks require that when they provide a performance bond on your behalf, securing your a contract, when they provide a performance bond on the construction company's behalf, sort of securing the construction company's obligations under a contract, that they will usually require the construction company to domicile an account in them. And this is where the lawyers come in, right? It is not just to say that it is a requirement. The performance bond contract itself must stipulate this.
Okay.
Then also there's a very trite principle in construction contracts and private public partnership laws, which says that important terms in this project-related contracts, just like the performance bond contract in this instance, must be back to back with the construction contract itself. And by back to back, I mean that there should be terms in the construction contract that reflect those terms in the performance bond contract. So let's say, for instance, the construction contract to say that the contract sum would only be paid into an account, of a bank, which provides the performance bond. That way, there's a synergy.
Oh, so basically that means the contractual mechanism that was likely to exist in this case of Enugu versus Sujimoto is a case of there was a performance bond. That was like the mechanism that both parties had probably agreed upon as the measure of transferring risk, or risk of assessment. If the question I want to ask is, what is the legal enforceability of performance bonds? Is it something that when you go to court you can tender it?
Well, at most instances you may not even need to proceed to court. The security in the performance bond, which is the amount which the surety has agreed to pay to the employer, which is the person who engaged the construction company. The amount is payable upon call if it's a demand bond. Then if it's a conditional bond, then it is payable upon meeting certain conditions. So let's get this clear. There are two types of these performance bonds. We have demand bonds and we have conditional bonds. Demand bonds basically mean that upon demand by the employer, which is the person who engaged the construction company, the shortee should
pay the bond.
The bond, yes, the security to the employer. Then conditional bonds say that, you know, upon meeting certain conditions stipulated in the performance bond contract, that the shortee ought to pay the security to the employer.
But now there's a possibility that, okay, the employee, which is the contractor, may go to the court and try to void the terms of the performance bond. Is that a frequent occurrence?
No. What usually happens is a case where the shortee would, you know, raise issues.
Okay.
Like in
the case of Sujimoto.
Yes, in this case, they may say that the
timeline was too short.
It may not be that. For instance, in this case, the issue that the shortee raised, which was Jai's Bank, the issue it raised was that Sujimoto ought to have, you know, domiciled the project's account in them.
Okay, in them.
Yes. So that was the issue they raised, and that is the issue they are standing on why they might not, you know, extend or pay the security. Yeah, so issues like that may come about. But if those issues do not come about, then the security is bound to be paid to the employer. The employer is the person who engaged the construction company, which is usually a government.
So now, one question I have is, when you look at this issue, you look at an issue where the state government gave 6 months for the delivery of 22 schools. Now, the issue now is speed of execution with due process. This was a large-scale construction process, relatively large scale. What do you think that, in practice, how do you balance? Let's now come to reality and say, okay, for any state that wants to engage in such projects, how do they now balance the speed of execution with following the due process in projects like this?
Okay. I would say, first of all, I would say that having projects with very short timeline is not new.
Okay.
It happens around the world as the quest for infrastructure development
happens, of course,
increases. People are trying to get infrastructures built and developed with speed.
Okay.
So it's nothing new. But you know, when you have that desire to expeditiously execute a project, you ought to reconcile it with, you know, silent principles of construction contracts and public-private partnerships, right? So one of them is that you have to space out payment of the contract sum, right? So you don't want a situation where the construction company, you know, is a bit lethargic because you have paid it so much amount of money, right?
Okay.
Or you don't even want an instance where you paid an amount of money which it does not need at that point, right? And the money may,
like 5 billion at once,
you know. So I get that they wanted to expedite the project by paying the amount of money, you know, to Sujimoto. I think it was close to half of the contract.
About half, about 50% of the contract sum.
So a good way to balance that would have been that you spread out the payment, but not too far. The payments could be made every 6 months, every year, right? But then,
well, in this case, it was the planning to be a 6-month project.
Yes, the plan is to be a 6-month project. You could say that that it would be paid monthly. You know, it's possible. And then not just that it's going to be paid, there should be preconditions for each payment. For instance, it could be that we would have a technical inspector who would inspect if the project is moving according to
project
design and according to time, right? And if it's doing so, we are going to make the next disbursement of funds. So these are just the kind of mechanics you have to, you know, put in these contracts to ensure that the construction company is up and doing.
Okay, thank you so much for staying with us. Thank you so much for this conversation. Thank you. I've just been speaking to Kenechukwu Chibueze Esquire, who is an associate with SPA Ajibade. We've been talking about the miasma or the debacle between the Enugu State government and Sujimoto Construction. And that's all we can take on economy and market this morning. Thank you very much for sticking with us. I'm David Olujinmi.